The stock market will bounce, and I'm going to prove it to you guys here in just a few moments. But first, we look at the fear and greed index. Yikes, we're back into extreme fear. However, is this a case like Warren Buffett says? Be fearful when others are greedy. Be greedy when others are fearful. Now, I know a lot of people right now aren't thinking about buying the dip, buying the dip, buying the dip. But tonight, we're going to talk about this on the live stream, which I stream live Monday through Thursday, 8:45 p.m. So if you guys would like to join me, make sure you're subscribed and you have the bell notifications turned on for all. But the Nikkei last night was down 4,400 points. You look at last night's candle, we can see it was down 12%. And I think at the low, the Nikkei was actually down 14% on the session. We got to ask ourselves, is this an exhaustion candle, or is this just the beginning of what is going to be a very devastating move to the downside? Now, all this started when the BOJ basically raised rates, which is causing the carry trade to essentially unwind. However, this is not the only thing the market has to worry about. We also have Iran threatening Israel and yada, yada, yada. Now, the market hates uncertainty. So the fact that the market has to deal with what it doesn't know is going to take place also is causing a little bit more problems out there. But I still think the big problem is going to be the Nikkei. However, it's just not the Nikkei. If we look over here at the dollar yen has been cascading lower. Why? Because as the BOJ raised rates, it caused the yen to strengthen. Now, if the yen strengthens, that means it's getting stronger against the dollar. And since the dollar is, and since the Forex pair is called the dollar yen, if the second currency pair is getting stronger, that's why we see the chart going lower. Now, today we saw a lot of the hot stocks falling out of bed, no doubt, where Nvidia was down 6.36% on the session. And there really was no place to hide, because if you come over and look at Bitcoin was down over $4,000 on the session. However, I'm going to show you guys, we have a lot of buying tails on the bottom of these candles. Now today, Nvidia didn't have the buying tail, but Nvidia opened up down near the lows and closed near the upper end of the range. Now, is this the beginning signs that we're going to get a bounce in this market? Well, for this, I want to come over and look at the SPX. And I want to prove to you guys, even if this is going to be one heck of a nasty sell-off in the market, I want to show you that even when we topped out between 07 and 08, notice every time we pulled back, the market, for instance, bounced up 8%. The market goes back down. It bounces up another 10% on the session. Then the market bounces up again, 14%. We go down lower. The market bounces up another 10%. Then I want you guys to pay attention to this leg here. We get a leg that where the market drops about 35%. Then real quick, the market bounces up 23%, only to come down, going lower again, and then bounces again 25%, goes down lower, and then bounces another 30-something% before ultimately putting in the bottom, continue to go higher. So regardless of what the news is telling us, regardless if it's Iran, if it's the Nikkei, none of that matters. What is the chart telling us right in front of our face? And we can see right in front of our face, the Russell 2000, the small caps are saying, watch out, get out of town. I know everybody said buy, 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 buy as the Fed starts cutting rates, but I wanted to warn you guys, all right? The Fed never cuts rates out of the goodness of the hearts. And that brings me to this article right here, how an emergency Fed rate cut to restore market confidence might actually backfire. Now, if you guys traded back during the 08-09 financial crisis, you guys probably remember every time Bernanke and Paulson came on to speak, what would the market do? It'd calm down, say, okay, we quit selling for a little bit. Then as they started talking, the market continued to go lower, lower, lower. And that could be exactly what unfolds. If the Fed comes out with an emergency rate cut, will that actually cause more traders and investors to lose confidence in the Fed? Has the Fed's soft landing narrative gone out the window and we are headed for a crash landing? You guys let me know what you think in the comment section down below. Now, as we jump back over and look at the charts real quick, right? Small caps came into the high volume area on the composite profile, which is something we've talked about for the last several videos. But then today we look at the diamonds, and what do we see? We actually have a selling tail on top of that candle. But I want to tell you guys something. This isn't necessarily bearish. And the reason why I say this is it's in the context of a downtrend. You can see we had that push up into resistance, shooting star type of candle. And then in 3 simple days, we've unwound several weeks of trading with 3 simple days. Now notice we came right to a high volume area on the composite profile. It would make sense to find a short-term bottom somewhere around this area. Now we do know that we have a lot of fear out there, because today we saw the volatility index spiking up to 65.73 and it closed out just below 40. It closed out at 38.56, still up 64% on the session. Then we come over and we look at the DXY. DXY has a buying tail on the bottom of that candle as well. So are we going to start to see the dollar starting to firm up? Because if we come over and look at gold last night was starting to try to push up, only to come back and get smacked. Now, was that nothing more than a head fake? Because also on gold, what do we see? We have that buying tail on the bottom of that candle, and we'll see, do we come back down, test the wick again, or do we simply run and push above this recent swing high, making a run towards all-time highs and actually coming all the way up towards our ABC projection somewhere around 25.56. Now, if we jump over and we take a look at the QQQs real quick, what do we see? A bloodbath out there. The markets just keep going down. But notice we had this ABC projection. We actually completed it to the downside. Now today we opened up near the lows only to start coming back up higher. And notice where we ran into a little bit of problem right here near the high volume area on the chart. Then as we come over and look at the MACD indicator, what do we see? A very bearish separation of the lines, and it's just very steep to the downside. However, look at the 4-hour chart. We showed no signs of the MACD indicator trying to firm up. But then as we go over to the 1-hour chart, you see the MACD indicator is starting to try to base out down here just a bit. I want to make everybody aware, Apex 7 a massive 80% sale off all their valuation accounts, passed in as little as 1 day, and you can also get a 150K account for only $40. You can get a 250K account for only $40, and you get a 300K account for only $40. So if you want to take advantage of this offer, use the link in the description box down below and use the promo code Mike at checkout. Then as we look at the 30-minute chart, we can see the MACD indicator has already started to cross to the upside. Now, I've already drawn this out, but we have the potential for an A to B equals C to D pattern, which gives us a price completion at about 451.83. Notice if we make it up towards that level, that would also fill the gap that was left behind from today. And it would make sense that some of this oversoldness gets worked off to some degree. Now, do we fill one gap or do we fill both of these gaps? That is still to be determined. But when we come over and we look at the futures markets, what do we see on the 4-hour chart? It was looking very ugly out here this morning. I actually thought we might hit the circuit breakers, but then we basically did a reversal and the market started to go on the way back up. Then as we come over and look at the daily profiles, we had a double bottom pattern this morning. And I really thought this was going to push down towards this untested point of control, but instead the market double bottoms and starts to reject on the way back up. Now we got two patterns in play. One, we have a double bottom pattern. Then we have the potential for this ABC pattern to the upside. Now we're going to go ahead and mark off where both of these patterns would actually complete. We look at the double bottom pattern, that gives us a price completion at about 18,634. And if we go ahead and we mark off this A to B equals C to D pattern, that would give us a price completion at about 18,821. Now notice, in order for the ABC pattern to be validated, we must break above the swing high over here. We break above that, then it's highly probable that 1, we're going to come over and fill the gap. 2, we're going to go ahead and take out the untested point of control. And then 3, we're going to hit one of these pattern targets out here. Now we come over and look at the SPY. Notice, what do we see? MACD indicator looks horrible. As we zoom this up, pay attention to this candle, right? We have a wick on the top of this candle. Now, normally I would say, yes, that is a bearish candle. However, in the context of a downtrend and in a market that short term is oversold, this could be part of a reversal pattern, but just be mindful, this is the weakest of all reversal patterns. And we'll see if we can come up trying to fill the gap and potentially, work our way up to this minus development area at about 53.36. Then as we come over and we look at the 4-hour chart, MACD indicator still looks horrible at this moment. But on the 1-hour chart, when we start to see that basing out effect like we talked about with the NASDAQ, and on the 30-minute chart, the MACD indicator lines have already crossed. Now we do have the A to B equals C to D pattern. That gives us a price completion at about 528.66. Now that is slightly below the gap from today. However, quite often we do see the markets overextend to the 127 extension. Now, if that does take place, that would put us a lot closer out here to potentially fill in that gap. Then as we come over and look at the futures markets, notice we took out this untested point of control going way back in time. And now the question is, we've already come towards this high volume area once. Are we going to come back again and potentially push through it? One of the areas I am watching is right within this minus development area, and that comes in about 53.30. We have a very large seller sitting up there. And I'll talk about that tonight as we take a look at book map. We also have the gap right over here. And let's not forget, from a weekly perspective, we close way below value area low. Can we potentially make it all the way up there this week? Because when we look at the economic calendar, we have no economic news to contend with for tomorrow. So I don't see the front how the economic news could push the markets up higher tomorrow, unless it's going to be Jpow trying to come to the rescue. We come out here and we look on the 30-minute volume profile charts. What do we have? Left shoulder, head, potentially right shoulder over here. Now, this is where this starts to get a little bit interesting as well. we can mark off A to B equals C to D, and that gives us a price completion at about 53.52. That puts us very close near filling the gap and towards that untested point of control at 53.57. So you most certainly want to pay very close attention to those levels. Are we going to be able to push up and out through those areas? We'll discuss that more tonight on the live stream. And if you guys want to see if Apex is still paying out its traders, make sure to watch this video right here.